Yo, what is going on, guys? Before this video begins, make sure you guys like, subscribe, turn on notifications, drop a like, especially that's the most important because it really helps out the channel and helps other people see the channel. So if you have been enjoying these videos, make sure to drop a like right now. But yeah, so today we're going to be looking at candlesticks, and candlesticks are very, very important. I literally base like half my trades off of only candlesticks. Like if I see a candlestick I like a giant green candlestick with volume, like I'll take a trade. So I literally only base it off trades I like, or I literally only base some of my trades off of candlesticks. They're very important. Candlesticks tell you a story. They tell you more than an indicator. It tells you, in my opinion. Like they're not lagging. They're real. They're in real time. Like you see how the candlesticks look in real time, so they're very important to check out. So knowing candlestick patterns is very important, and I'm gonna be going over 4 of the basic ones that I personally use the most in this video. So like there's gonna be more candlesticks I'm not gonna go over, but I don't think you need more than 4 because I literally only use like the same 4, and and that's literally all you need. So I'm gonna be going over 4. In the future, I'll do a candlestick pattern video with more candlesticks. So if I go to here and click the sheet, if you're in my Discord server, you can go to the flashcards section and there's a candlestick chart. So it tells you the candlestick basics. I went over candlesticks in the other video, and the 4 that I use are the hammer, the doji, the spinning top, and then the morning and evening star. I count that as like the same, but they're just opposite. So what a hammer is. So this is a hammer right here. We got like a body that's like 2/3 of the wick, and then we got a wick that goes down and then back up again. But the wick basically goes down. So what does this tell you? So this tells me that at the bottom of a trend, the buyers are pushing this wick. They're pushing the price back up before the candle closes. And then usually I do not enter the trade right there. Usually I'll wait for like a nice green candle. So if we go to the Apple Daily, let's look for hammer in the Apple Daily. So right here, so we see this nice hammer candle right here. Usually I will not enter on this candle on this day. Usually I wait till the next day or the day after, and ideally I want to see a nice green candle after the hammer, and that shows me that we're probably going to continue in an uptrend. So we see this candle, and then we see it continue up in an uptrend, right? So that's the hammer. I see these a ton. These are always to the bottom, and basically what waiting for confirmation means in regards for this is just waiting for a green candle after the hammer and then playing after that. But sometimes if the day looks strong and it's a day after that where you saw the hammer and the day looks strong, you could definitely take a trade at the beginning of the day with like a stop loss under the body of the hammer, under the close of the body of the hammer, or open, depending on how much money you're willing to lose. And I go over how to play stop losses in another video. Make sure you guys watch that. So that is a hammer, and the reason why I use hammer so much is because I see them everywhere and they work so well, and it's hard to find a hammer that does not work. I couldn't even find one before this video. Like I was looking for like 10 minutes. I cannot find a single hammer candle that didn't work. At the bottom of a uptrend or downtrend, they do sometimes, like you might see a hammer in the middle of an uptrend, but those are like, this is kind of a hammer, but it's like a half a hammer. But like this doesn't really tell me anything. I mainly look for hammers at the bottom of a downtrend. So if we go here, hammer gaps up right here, giant hammer gaps up right here, another hammer goes up right here. There's so many. Giant hammer goes up. See how much the buyers push back up this price. So cameras are very, very important. I use them all the time. Let's go for the next one. So Dojis is basically a candle that opens and closes at almost the same price or the same price. So if I go to the Doji, this would be a Doji. See how it opens and closes at the same price? And usually this represents like buyers and sellers. They don't have a clear trend. Like buyers are not in control and sellers are not in control. So usually when we see Dojis, we often see like reversals. So if you look right here, this is kind of more of a doji rather than a hammer because of how thin this is. So we see this doji. This is called the gravestone doji actually, and let me see if it's on this chart. Gravestone doji right here. See how it almost opens and closes at the same price, but it's the sellers push it back down. This would be considered a gravestone doji. And you guys got to understand, the reversal doesn't happen after one candle. It could happen after a few days. It could happen after a few candles. But as soon as you start seeing these candles, like as soon as you see this, it takes a little bit and then finally it drops. Because see how all these candles show a ton of weakness because they're all wicky? That means like buyers are not in control, sellers are not in control. But we see sellers are in control here, sellers are in control here, and then we see some more buyers come in, but sellers are still pushing down the price, and then finally we see a ton of selling volume right here. So that's very important to take account. Literally, I just read you a whole story based on just these candles, and you definitely could have played puts or gone short here after seeing this weakness, and then you would have gotten a nice candle here. So that is something to keep in mind. So dojis, let me go back to this. So basically dojis, like I said, I usually see them at the end of trends or like for reversals. So let me go to like the 5 minute of Apple. Let me look for another doji. So right here, see this giant green candle, then this doji. See how many buyers are here, but then we don't see the same amount of buyers here. We see sellers come in here because there's indecision in the price. And then finally we see even more sellers come in after we saw how weak the buyers were here. And if you look at the volume, see how lower this volume bar was compared to all these. So we definitely see we lose buyers here, we lose momentum, and this is also called the morning star pattern, or evening star. I mean, if we go to look, this is this is the evening doji star. So look at this pattern right here, evening doji star. This is literally almost exact same. So I also use this pattern a lot. I basically just consider this the evening star because it's a clear reversal, and then after this we see a nice downtrend, close under, view up, and then it kind of knifes down. So that would have been a nice trade. That would have been like a nice 40 cents trade, and that's really good for options. So that is another candlestick I use. The third candlestick I use is bearish spinning top. So I love using spinning tops. And you got to understand, spinning tops, dojis, they all tell you the same thing. They're literally just indecision in the price. So this is a spinning top right here. This isn't a full doji because it opens and closes at a little different price, but like barely. It's literally opens and closes 3 cents off. So this is a spinning top. It looks like a spinning top, as you guys can tell. And this is another evening star because we got this green candle, and then we got this indecision in the price, and then we got this red candle. And then we see it retest, view up. This is a bear flag, and then it closes under. So this is spinning top. Spinning top usually represents weakness because it represents a bunch of wicks, and we don't like weakness. We don't want to be in trades when we see weaknesses. And usually you see this weakness at the top of trends, like with these spinning tops, and then that represents a trend reversal down, and then you can also see these at the bottom of trends. So pretend that this is more of a doji rather than a spinning top, but pretend this is a spinning top. That means the sellers are starting to lose momentum and buyers are starting to come back up because the candles aren't as big anymore. So we see buyers come in, and then finally we see even more buyers come in after we see the buyers are able to hold this price here at 150.14. So I always use spinning tops and dojis to identify reversals. They're actually really useful, and usually I like looking for a green candle, doji / spinning top, and then a red candle, or down here red candle, doji / spinning top, and then a green candle. So that's just something that works for me. I use them all the time. So these candles might not work for you, but I literally see them every single day. They're very, very easy to read. So yeah, and other than that, I think you should know. Other than that, you don't really need to know any of these, like bearish harami, dark cloud cover, tweezer top. I don't use any of these, and I've been pretty green the past month not using any of these. I think it's better to stay consistent and use like the same kind of candlesticks, especially the most common ones that you see every day, because if you're trying to use 10 candlesticks, then you're going to get lost, and you're going to be like, oh, well, this candlestick looks like a tweezer top, but then the next candlestick looks like a doji, shooting star, blah, blah, blah. So try to stay consistent. Use like 4 or 5. And the last one I'd recommend you using is the bullish engulfing and bearish engulfing. And this is a bullish engulfing. And basically what this means is a green candle overtakes a red candle. So if we go to This let's look for a bullish engulfing. So might take me a second to find. So if we go to a bullish engulfing, so come on, give me bullish engulfing. I've seen a few already, but I don't want to like give you guys a sloppy one. So this would be bullish engulfing. So see how there's this giant red candle, but then the buyers shoot this right back up, and then it closes past the last red candle's close. It closes over that. This is a bullish engulfing, and this is a really good sign. And as you can see, after we saw this, we see a, like I said, remember the trend does not change right away. So if you're playing options, it's more risky because of theta, but the trend does not change right away. And if you did go long after this candle, your stop loss would be under this 150 level, because the bottom of this candle is near 150. That's a psychological support, and that's like it's a really good stop loss. And I go over stop loss in my other video, as I said. So you would have taken the trade right here after this bullish engulfing. We see it dip down again. We see a nice hammer, reverses again, and then finally has this nice double bottom right here, and then bounces off this double bottom, and then finally goes up, and you could have got a nice $1.50 move right there. So that is a bullish engulfing candle. And then a bearish engulfing is basically just opposite. It's when the red candle overtakes the green candle. So right here we see this bearish engulfing. It totally opens and closes before and after this green candle, and then again we see this nice downtrend go down. It goes down and gets rejected by VWAP, and then we see it go down all the way to this 150 level. So that was another nice $1.50 move. So those are the candlesticks I mainly use, and maybe I'll go over like another video in the future on like other candlesticks, because you might not like the ones I use, but literally those are the ones all the time I see all the time. Like the bearish abandoned baby, like I barely see this. Three white soldiers I do not like, because why would you buy if you see three green candles? Why would you buy at the top of the third candle? You're like, oh, that's three white shoulders, I'm gonna buy now. But by that time the RSI is probably almost oversold. It's probably a little overextended, so it needs a pullback, and pullbacks are very healthy during a healthy uptrend, or pullbacks are very good during a healthy uptrend. So that's why I don't like that. But some of these other candlesticks I don't really see a ton. We got the bearish kicker and bullish kicker. This is kind of a gap up or down. But maybe I'll go over these in the future. But the ones I showed you are the ones you're going to see a ton. That's basically all you need to know. But yeah, other than that, I hope you guys enjoyed this video. Let me know what you learned about candlesticks. Let me know if you have any questions. Make sure to use my Webull referral code. Like and subscribe. And yeah, other than that, peace out, guys.